Hello, good morning, ladies and gentlemen. How are you all doing today? And trust you had a beautiful and wonderful weekend out there. I'm so excited to be with you here this morning, and I'm so very grateful to be alive to be with you here as we get prepared for the New York session today. And you know how we do it. The first thing we want to be doing right now is to confirm that we are good to go this morning. So if you can see my screen and you can hear my voice clearly without distortion, why not give me a hi in the comment section so that I can understand that we are on the same page together. So I'll be waiting for some feedback, please. If you can hear my voice clearly and you can see my screen, please let me know in the comment section by typing hi in the comment section. All right, so let's see what we have here. Okay, I can see Foster Lim. Hi, thank you very much. 9113 7411, good morning to you. 336, good morning to you. Kopahin, I hope I pronounced that correctly. Good morning to you. Nes57, good morning to you. And 136, okay, good morning. Hey, Carrie, good morning to you. I can see you have a new username right now. I hope that is you. Are you the one? Good morning to you and glad to have you around. My name is okay, that's great. I will want to learn how to do that one too. So probably we could talk one-on-one to learn how to do that. Thank you very much. Trust you had a wonderful weekend. All right, so my name is Sharif Daramola, and as usual, I'm going to be your host for the next 1 hour, where we shall be evaluating the financial markets through a comprehensive price action perspective. And we're also going to be exploring the recent movement and chart patterns to uncover key insights that can potentially shape our trading decision ahead of the New York session today. And considering this is the first trading day of the week, we have quite a lot of opportunities lying ahead of the new week. And in fact, I have a handful of financial instrument that I would like to share with you this morning with very simple setup, very easy to follow through as we get into the session. And for those who are joining us for the first time, you are highly welcome on board. And for those who are joining, what is our purpose here? Well, what we simply do here is to come together as a community, gathering in anticipation of the New York session. And during this time, we will be reviewing and managing our current positions while also aiming to position ourselves strategically for the New York session. So we do this on a daily basis, 10 a.m. UTC, 11 a.m. West African time. So try to stay tuned in throughout the session so that you can understand how this works. And the more time you spend with us, the better you become in using the information you have gathered here to make your independent decision on your account. So once again, you are welcome on board. So with that being said here, let's dive right into the business for today. And you know how we do it. The first thing we want to be doing is to keep tabs with the fundamentals by checking the economic calendar, and you all know how important the economic calendar is for us in this community. And these fundamental factors often manifest on the charts in technical patterns and price movement. And by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns. So with that being said, let's scale into the economic calendar, and here we go. So I would like to zoom things in a little bit so that we can see things more clearly. Now, looking at the economic calendar here, we normally focus on high impact events that will be obviously affecting any of the currencies that we are monitoring for the week. And from what I have on my watch list here, I have the Japanese yen, the US dollar, and then the pound sterling. So we are going to be looking forward to any economic events that will be affecting any of these currencies. And from what we have today, Monday, June 19th, there are no high impact events to look out for until tomorrow. So in that regard, we are going to be skipping the economic calendar for today while we rely on our technical skills to identify trading opportunities ahead of the new week. And today is Monday. If you have any financial instrument, be it cryptocurrency, currency pairs, options, or commodities, feel free to let me know in the comment section. Just drop it in the comment section and I will incorporate it into our plans for the week. So with that being said, let's dive right into the business. And the first commodity we are going to be looking at this morning is going to be the US All Spot. Now, on the US All Spot, we have quite an interesting setup here. But before we go into the details of what our expectation is going to be looking like for today, we want to be scaling into the higher time frame to see how to position ourselves ahead of today's trading session. Now, the first thing I did here was to scale into the 4 hours time frame, where I was able to identify a simple setup that we are going to be using to guide our trading activity for this week. Now, on the 4 hours time frame, looking at things from an holistic standpoint, you would realize that price action is looking a little bit bearish in this market. And despite the consistent presence of strong lower highs, the possibilities of a bullish surge grows increasingly with each passing day. And the main factor to this belief is sellers' ongoing struggle to breach the $67 area. So if you look at this structure closely, despite the fact that we had lower highs, as you can see, after connecting the series of lower highs here, we have a bearish trend line. You will notice that as soon as price action got into the $67 level since the beginning of the month of May, we saw how buyers jumped in to negate any attempt by the sellers to break through this level. Look at what has been happening here. And in fact, the same thing also happened a couple of weeks ago in this market. So it's a clear sign that that level is a strong buying niche for participants in this market. And as a result of this one, we saw how this bullish momentum brought price back into a very important zone here, which shares a confluence with that bearish trend line that we identified earlier. So in order to help me guide my trading activity for this week, I was able to identify a key level that I will be using to guide my moves. So we have a key level at the $72 area, where I'm going to be looking at how participants in this market will be reacting to this level during the early hours of this week to decide what our next line of action will be. Now, in order to have a better perspective into what is really going on around that trend line and that key level, we would want to scale down to a much more lower time frame where we begin to see things more clearly. Now, if you scale down into the 1 hour time frame, this is what I was able to spot here. So the first thing I saw here is that since last week's trading session, it's quite obvious that price action has been bullish. And when we connect the series of higher lows together, you will see that we have a couple of trend lines to work with for this week. And you know how we use our trend lines in this community. So as long as price action remains above the trend line, we'll feel comfortable in a buy position, while we also look out for more opportunities to buy the US All Spot. And considering this price remaining above the bullish trend line, it makes quite a whole lot of sense to buy the US All. Now, zooming into the activities at the beginning of the week, let me zoom things in closely so that you can see things clearly. So the first thing we saw this morning when we opened the chart was this bearish gap, which reveals that sellers were in charge of the market during the course of the weekend, pushing price to the downside. And in fact, the week also started on the bearish note, as we saw how price action started the week at around the $71.45 level. Price dropped into the $70.85, came back into the $71.45 level to give us a channel to work with for this week. And with a beautiful range between the $71.45 and the $70.85 level, we have a flat channel to work with. And you know how we do it in this community. when price action is caught within a range like this, we want to wait patiently for structures to mature, giving us a signal which will come either in the form of a breakdown of the support line to give us an opportunity to sell, or the breakout of the resistance line to give us an opportunity to buy. And with my buy stop and sell stop order placed at both ends, I had my buy stop order triggered at the $71.45 level. And if you are taking advantage of that opportunity right there, well done to you for being on standby to have caught that move. So if you have a buy position running, you want to be moving your stop losses to your entry point to secure this position, where if price action moves against us, the worst case scenario we are going to be getting here is a break even. Now, for those who had missed out on this opportunity, don't worry. We are still going to be looking out for more opportunities in this market to maximize this bullish move, if this is what is going to be happening, at least for the first half of this week. Now, in as much as this bullish move has already broken out of the $71.45 level, there are still a possibility that price goes to come back and retest the structure. Remember, we have a trend line here, which we are going to be using to guide our trading activity for today. In fact, we have a couple of this trend line. So we have the first one here, and we also have the second one here. So this trend lines, please mark these levels out on your chart. We are really going to be using this to guide our trading activity for today. So now let's talk about the first trend line here. So there is still a possibility that price will come back and retest that structure. And if it does, the appearance of buy pressure above this level on our lower time frame will give us that opportunity to be part of a bullish move to the upside. Excuse me. So that is one scenario to taking advantage of this move right here. But if at any point in time price action breaks down the trend line to the downside, then at this point we want to consider selling. Excuse me, I'm sneezing, sorry. So if price action breaks down, retests the trend line, retests the $71.45 level when we scale down into our lower time frame, then this will give us signs, an opportunity to sell the US All Spot. But remember, we still have a trend line here along the $70.85 level, which happens to be the support line for the week, where it could also hold buy pressure to incite another bullish move to the upside. So all these situations, we want to take them into consideration, but I doubt if price will drop that far. But if it drops that far, we always want to be on standby to catch any opportunity around that area. Now, what happens here if price does not drop into the $71.45 level, which also shares a confluence with our trend line? So what happens if price does not drop there? Well, if price action continues to find higher highs in this market, then a breakout of the $72 level, which happens to be our key level for the week, would have taken out all the sell positions along this area to signal the opportunity or high there of getting ready to buy. So we are going to be looking forward to more buying opportunity if price action breakout retest this $72 level. So let's be on standby to catch this opportunity. You might want to screenshot my screen or use it so that you can use that as a reference point when you're about to make your independent decision, or you can as well mark out those levels on your chart right now so that you can use it to guide your trading activities independently. So I will be taking the next 10 seconds to wait and see if there are any questions for me as regards to the US All Spot before I move on to the next instrument. And as well, you can also use that time to screenshot or mark these levels out on your chart. So let's see. All right, so in the absence of no questions, I want to assume that we're on the same page here. So I will be moving on to the next option. And the next option we are going to be looking at is the USTech100. Okay, hello, Nest57. Okay, thank you very much for that confirmation. Susie MB, how are you doing this morning? Good morning to you. So moving on right now is the USTech100. And I have a simple setup here on the USTech100, but let's quickly run through. Let's have an holistic perspective into what is really going on in this market before we go into the details of what our expectation is going to be like for today. So right now, the first thing I did here on the USTech100 was to take a look at the 4 hours time frame, as this will help me get a better idea of the long-term trend in this market. And as you can see, after taking into consideration the activity of price action since the 3rd week of the month of April, you will see our price action had consistently found higher highs and higher lows in this market. And to help us emphasize the importance of the buyers in this market, I was able to connect the series of higher lows. So we have a couple of trend lines here. So the first major trend line is this one here, and the thick green line on your screen. So that is the major trend line, which was respected for about a month before we saw the deviation from that trend here and here to give us a new trend line from that point. Now, if I connect the series of higher lows from that point, we had another new trend line. That is the deviation we saw. And this gives us an idea into the strength of the buyers in this market, and also emphasize the level of hope that the USTech100 is very valuable at this point. Then again, you saw here during the course of last week's trading session, we saw another deviation from that bullish trend line. And you saw another one when we connected the series of higher lows to give us a new deviation here. And you can see the steeper the slope is, the likelihood that there could be a fall anytime soon. Now, with this whole situation we have here, with these trend lines we have here, you would agree with me that the whole structure here is looking, a retracement phase looks long overdue at this point, especially for those who are taking advantage of this bullish move at a very cheap price, let's say around the $13,000 level. We'll want to be doing some profit-taking activities, which at one point might reflect on the chart as a retracement of that impulsive move, probably into any of this trend line, either this one or this one, to incite another wave of bullish momentum. So we want to take a quick look at what has really been going on in the last couple of weeks to see if there is any tendency that a retracement phase could come here. Now, if we zoom into the current activity since last week, Wednesday, we saw a very important key level, a strong psychological area at the $15,000 mark, which was broken to the upside. And I think this is the first time price will have broken out of the structure since in the last couple of years now. And with a breakout of the $15,000 area, we saw our price action since then had been caught within a range between the 15,300 and the 15,000 level to emphasize the level of indecision in this market. And you know how we do it whenever we have this kind of simple flat channel. We want to wait patiently to see how price action will be reacting to the structure before making any informed decision here. Now, one of the things we are going to be looking out for is for price action to break out of the resistance line at the 15,300 to give us an opportunity to buy. That is one way to look at this. Or price action break down the support line at the 15,000 level to incite a sell-off, which could be the beginning of the retracement phase I was talking about earlier. Now, with the situation we have here and looking at where price action is currently, you will see this is where price action has been, just around that 15,150 zone. How are we going to wait for price action to break out of the 15,300 before we can buy? That's about 200 pips move. Or are we going to be waiting for price action to break down the support line at the $15,000 mark before we think about selling, which is about 100 pips move in that regard. Of course not. Excuse me, please. So what we are going to be doing now to have a better understanding of what is really going on around here is to scale down into a much more lower time frame so that we can position ourselves in such a way that we can catch any move early enough before even the breakout to the upside happens or the breakdown to the downside happens. So in order to do this now, we want to scale down into a much more lower time frame, and we shall be scaling down into the 1 hour time frame. Now, before I scale down into the 1 hour time frame, I want us to acknowledge here that price action is currently ranging along this trend line. Very, very important. We must take that into consideration as well. So we are at a very critical point in the market where, depending on how price action reacts to this trend line, will determine what our next line of action will be. So if buy pressure continues along that trend line, then a breakout of structure in our lower time frame will confirm that the trend line is still strong enough to negate the bearish momentum in this market. But if price action breaks down the trend line, then at this point we want to be looking out for selling opportunities. So we want to use the trend line as one of our parameters to guide trading activities for today. So I want to include it on my lower time frame. So let's scale down into the 1 hour time frame. So now on the 1 hour time frame, we want to look at how participants in this market has been reacting to this market structure since the beginning of this week, and this was what I was able to come up with. Now, if you look at the structure here since the early hours of today, you will notice how the market is still looking very, very indecisive at this point. As you can see, price action has been ranging, caught within the 15,135 level and the 15,075 level. And this for us is an insight into the level of indecision in this market, as participants are still very risk averse here, not knowing where price action is likely going to be going, at least for the first half of this week. And you all know how we do it here in this community. Whenever we have a simple flat channel like this, we want to wait patiently for structures to mature, either in the form of a breakout to the upside to buy or a breakdown to the downside to sell. And considering the fact that we are on a very strong bullish momentum, as you can see here, I'm of the opinion that if we are going to be selling at the breakdown of the support line, we need to be very, very careful. We are not going to be jumping into a sell stop order at this point, as we want to see price action break down first of all. Then we scale down into our lower time frame, where we want to be looking out for patterns and structures that support the idea that sellers are gaining momentum here. And this would reflect on the chart as a retest of structure, where we shall be looking out for selling pressure, signs that buyers are finding it difficult to climb back above the $15,075 area to join a bearish move to the downside. Then if this happens, we have a sell stop order below the $15,000 level to maximize the bearish momentum to the downside. So this is how we are going to be selling the USTech100 today. So we are going to be very, very careful around that $15,075 area. As you can see, since the beginning of the week, this level has been serving as a strong buying niche, negating all attempt by the sellers to break through that structure. So for us to sell right here, we are going to be very patient, wait for the breakdown to happen, not get too excited. Then you scale down into your lower time frame, look out for retest of structure, continued selling pressure. Then we want to be joining a bearish move, and at that point we have a sell stop order below the $15,000 mark to be part of a bearish move to the downside. So that is how we are going to be selling the USTech100 today. Now, in as much as this is explained clearly, if you have questions, please let me know. The other option here is the breakout of the 15,135. And in fact, considering the fact that this is a very strong bullish momentum in the last couple of weeks now, I'm going to be having a buy stop order above the 15,135 level to take advantage of a bullish move to the upside. So let's have a buy stop order there, and if it gets triggers, then we will be seeing this as the beginning of another wave of bullish momentum to the upside. So let's mark these levels out on our chart. So our center of focus for today is within the 15,135 and the $15,075 area, which shows us the level of indecision in this market. And in fact, it is a simple setup that we can use to guide our trading activity for today. So let's mark this out on our chart. Screenshot my screen if you want to, so that you can use it as a reference point when you're about to make your independent decision on your account. If you have any questions regarding what I just explained so far, feel free to let me know in the comment section, and trust me, I am here and willing to be of help in that regard. So I will be taking the next 10 to 15 seconds to see if there are any questions while I read through the comment section. Okay, I can see Ezabil Abdullah. Good morning to you. Thank you. Kai88, good morning. The Negro, good morning. 7115, good morning to you. Kalikol 12, good morning. Aki88, how are you, Aki? Good morning to you. Glad to have you around. Trust you had a wonderful weekend. So in the absence of no questions, I want to assume that we're on the same page here. So I will be moving on to the next option. So the next instrument on our watch list is going to be the GBPUSD. Now on the GBPUSD, I have a simple setup on the 1 hour time frame, which I already took advantage of, and I would like you to have an overview of how we got to this point in this market. So the first thing we did here is to scale up into the higher time frame, and that is the 4 hours time frame, to see how the market has been behaving since the beginning of this month. I think, okay, since the last trading week of the month of May, and it is quite obvious that the momentum is very, very bullish. And if you look at the structure closely, you will see that we have a couple of ascending trend lines. The first one, after connecting the series of higher highs and higher lows, we had this first trend line, this first ascending channel to emphasize the momentum of the bullish, of the buyers in this market. Then we also have the second ascending channel after price action broke out of the resistant line of that ascending channel we identified earlier to give us a new ascending channel to work with. So this further emphasized the strength of the buyers in this market. However, something interesting happened during the second half of last week. Let me zoom into the current structure. You will see here that as soon as price action got into the 1.28500 level, we begin to see sell pressure resume around that area on Friday. And in fact, I have a range here figured out. We saw the breakout of the 1.2770 retest to bring price into the resistant line of that 1.28500 level. Now we have a range to work with for the week, where price action remained consolidating between that zone since last week Thursday, I think. Hold on a second, let me check. Okay, since last week Friday, price has been within that range between the 1.285 and the 1.277. And this is for me a sign that there is a level of indecision in this market, hence we want to be very careful, waiting for structures to mature before jumping into any position at this point. And you know how we do it. Whenever we have this kind of simple setup, we want to wait patiently for structures to mature, where the breakout of the resistance line will give us an opportunity to buy, and the breakdown of the support line will give us an opportunity to sell. And one thing we always want to do here is to try and maximize and project where price action is likely going to be going, so that we can join that move even before either the resistance line or the support line of this range is broken. So what we are going to be doing now is to scale down into the lower time frame, where we want to see how participant in this market has been reacting to the structure to determine where price action is likely going to be going for this week. And remember that we have key economic data coming in from the United Kingdom's economy for this week. In fact, one of the top ones is the interest rate decision, which is coming up on Wednesday. And this is one thing majority in the market will be looking forward to. And this might reflect on the chart as a choppy situation or a consolidation phase in anticipation of this event. And it is very likely that we see a consolidation phase during the first half of this week. So even if we are having a position running, we want to be very, very careful. Moving our stop losses to secure position is going to be very, very important for us to manage this trade on this, to manage this instrument that we are reviewing right now. And in addition to the fact that we want to scale down into the 1 hour time frame to see how participant has been reacting to this level, it's also clear that if you look at the structure and consider the impulsive move that started a couple of weeks ago, you would agree with me that a retracement phase seems long overdue at this point. And judging from the continued selling pressure around the 1.28500 level, there is a likelihood that price will drop probably into any of the trend lines, maybe in an attempt to incite another wave of bullish momentum. So we want to scale down into the lower time frame to see how possible that is, if that is what we are going to be looking out for this week. Now, scaling down into the 1 hour time frame, there are a couple of structures I was able to identify here that will be needed to guide our trading activity for the week. Then one of them is this trend line. So I was able to connect this trend line together to give us this. Sorry, I was able to connect the higher lows here together to give us this trend line. So this trend line has been connected since Thursday of last week, as you can see. And what we saw during the early hours of today was price action breaking down that trend line for the first time in the last 3 days. And this for me is a sign that sellers might likely be taking over this market, pushing price to the downside to incite that retracement phase I talked about earlier on the higher time frame. Now, in addition to the structure we just identified here, is a simple setup I was able to spot after monitoring how participant in this market has been reacting to the structure since the beginning of this week. Now, what I was able to see here was that price action has been ranging between the 1.28375 and the 1.28100 level to give us an insight into the level of indecision in this market. And you know how we do it whenever we have this kind of simple setup. We want to wait patiently for structures to mature. We're waiting for either a breakout of the resistance line to give us an opportunity to buy, or breakdown of the support line to give us an opportunity to sell. Now, with the situation here, I already have a sell stop order after seeing price action break down the support line at the 1.28100 level. So if you are taking advantage of that opportunity, well done to you. Let's see how this goes. I'm of the opinion that if price action remains below the 1.28100 level, we are going to be looking out for more opportunities to maximize this potential bearish move to the downside. And to help us guide this bearish move to the downside, we should be having a trend line after connecting the series of lower highs. So I will be doing that right now. So we are going to be using this trend line to guide. So I would like to thicken this one a little bit to emphasize its importance from this current structure. So I'm giving it a red color. So we have something like this. Let's bring back our candle chart and do some adjustment here to capture most of the wicks of this candle. So something like this. So what this simply means here is that as long as price action remains below this trend line, we shall feel comfortable in our sell position. So this trend line also helps us to position our stop losses. So anywhere above the trend line. So we should be having a stop loss of between 15 to 20 pips on this one. So there's still a chance that price could come back into the trend line, retest it a couple of times, selling pressure to incite the bearish move to the downside. Then one more thing I would like to call our attention to here is the trend line we identified on the 4 hours time frame, which you can see here, which also shares a confluence with the 1.28100 level, as you can see here. So a breakdown retest will definitely be an idea, give us an idea of selling the GBPUSD. So at this point, I'm looking at a bearish bias on the GBPUSD. So we have two structures to guide our trading activity for today. The first one is this trend line. You want to mark it out on your chart right now. And then the second one is that key level, the support line for the week, sitting at the 1.28100 level. So anywhere below these structures will be welcoming selling opportunities in this market. However, if at any point in time price action breaks out of the trend line to the upside, you know how we do it here. We always want to keep tap with the opposite direction too as well. If at any point in time price action breaks out of this trend line, that is, this trend line is breached, then at this point we want to start considering buying the GBPUSD, as a breakout of this trend line will be a clear sign that this trend line may no longer be strong enough to negate the bullish momentum that it has been negating since last week's trading session. So if the breakout happens, definitely we want to be getting ready to buy. And remember, we are not getting too excited. If the breakout happens, we want to remain patient and wait for structures to mature before we jump into any position here. So once the breakout of the trend line happens at any point in time, I doubt if it will happen, but if it does happen, we want to scale down into our lower time frame to look out for retest of structure where the appearance of buy pressure resumes there to give us a confirmation to be part of a bullish move, and then a buy stop order above the 1.28375 and the key level at the 1.28500 level will welcome more opportunities to maximize the potential of that bullish move. So let us be on standby to capture any of these opportunities. You want to mark these levels out on your chart, screenshot my screen if you want to, so that you can use this as a reference point when you're about to make your independent decision on your account. So that is that on the GBPUSD for today. So we're still holding on to a bearish bias unless the breakout of a trend line happens. That is only when we will start thinking of buying the GBPUSD for today. So let me know in the comment section if you have any questions, and I'll be taking the next 10 to 15 seconds to read through the chart and see before I move on. So in the absence of no questions, I want to assume that we're on the same page here. 307, good morning. Thank you very much. 4114, I see you. Good morning to you. All right. So in the absence of no questions, I want to assume that we're on the same page here. So I will be moving on to the next instrument, which is the XAUUSD. So the same thing happened here on the XAUUSD. I already have a position triggered at this point. So let's run through the 4 hours time frame. Let's have an holistic view of what is really going on in this market and how we intend to position ourselves ahead of the new week. Well, the first thing I saw here on the 4 hours time frame is the fact that price action is looking a little bit bearish in this market. And despite the consistent presence of stronger lower highs in this market, as you can see here, the possibility of a bullish surge is still increasingly growing, which we cannot ignore at this point. And the reason why I have said this is simply because of how that demand zone at the 1930 had continued to hold buy pressure over the last couple of weeks. Now you can see here that every attempt by the sellers to break through the structures has been met with strong resistance from the buyers. The same thing also happened here last week, as we saw this attempt by the sellers to break through the 1930 was met with stiff resistance from the buyers, and this gives me a sign that we might likely be seeing a bullish momentum anytime soon. But in as much as this demand zone is here, we cannot just jump into a conclusion. Since price action still remains below the bearish trend line, it doesn't make any sense to buy as long as price remains below our trend lines. So in order to guide my trading activity for for this week, I was able to identify a key level that we are going to be using to guide our move. And the key level falls exactly at the 1960, a very important level here that has been a major determinant of price action since the mid-month of May. And if you look at how price action has been relating to this level in the last couple of weeks, you will see how this area has been a strong selling niche. And as a result of this, I was able to identify a supply zone around here, which as long as price remains within this zone, we want to be looking out for selling opportunities. And the only thing that will make us buy the XAUUSD at this juncture is to see price action take out, climb above the 1960, take out all the sell positions, break out the bearish trend line. Then at this point, we want to start considering buying the XAUUSD for this week. But as long as price action remains below the trend line, below the key level at the 1960, and in fact below the supply zone at the 1965 zone, we have no other choice than to look out for selling opportunities. Now let's scale down into the lower time frame to see how participants in this market has been reacting to that area around the 1960. Now, when we scale down into the 1 hour time frame, things become a little bit more clearer, as I was able to spot a simple reversal pattern on the 1 hour time frame. Now, let me bring this out so that you can see. So I was able to spot a head and shoulder pattern, which from a technical standpoint is a very, very strong reversal pattern. Now, if you look at this impulsive move on Thursday into the structure, giving us our left shoulder, we have the head, and then we have the right shoulder here as price was unable to break above the previous high. And when we have a reversal pattern identified like this, the next thing we want to be doing is to identify a neckline where we need a breakdown of the neckline to confirm the validity and potency of that reversal pattern. And coincidentally, we have a neckline situated at the 1955, a level which has been a strong buying niche since the second half of last week. You saw here, set buyers negate selling attempts. We saw the same thing happen here. We saw the same thing happen here as well. And even during the early hours of this week, we saw the same thing happen around this area. So what we are going to be needing here is price action to break down the neckline to give us an opportunity to sell. And as a result of this, I had my sell stop order below the neckline area at the 1955, where I had my first sell position for the week triggered. And if you are taking advantage of this opportunity, well done to you for being on standby to catch that move. But if you had missed out on this opportunity, it's okay. It's still the beginning of the week. We still have a lot of time to catch more opportunities in this market. So we want to remain patient. We don't want to jump into a moving trend right now. And let's wait patiently for new structures to mature so that we can join this move to the downside. Now, this is what we are seeing right now. Price action has moved significantly well. I have about how many pips right now? About 37 to 40 pips running in profit at this point. And for those who took advantage of this opportunity, you obviously want to be moving your stop loss right now to secure this current sell position. And for those who had missed out on this opportunity, like I said, let's hold on and wait for new structures to mature. And one of the things we are going to be looking out for to guide our bearish momentum at this point, I have a trend line here. Hold on a second. Let me hide this one. So I have a trend line after connecting the series of lower highs here. So if you look at this closely, you see there is a trend line. So we are going to be using this trend line to guide our trading activities for today. And what this simply means here is that as long as price action remains below the trend line, we want to feel comfortable in our sell position. So look at what has been happening since the later part of last week till the early hours of this week. We can see how selling pressure has been negating all the bullish attempts around that area. So let's continue to hold on to a bearish bias at this point. And in fact, I also have a channel which I identified earlier where price action was ranging at the beginning of the week between the 1958 and the 1953. to emphasize the level of indecision in this market. So let's see how price action play out from the structure. So what you are going to be looking out for at this juncture is a retest of structure if possible. If price action comes back to retest the $1,953.50 level or the trend line here, definitely we want to be looking out for selling opportunities around that area that is scaled down to your lower time frame. Look out for selling pressure around that area to join this bearish move to the downside. So that is how we are going to be selling the XAUUSD today. Then another thing that could happen here is that if price action does not come back to retest the structure, but instead it goes into a range, then you want to position yourself at the breakdown of that range, like the breakdown of the support line, to join the bearish move to the downside. So these are the two ways we have here to take advantage of a bearish move. This is for those who had missed out on this opportunity here. And remember that this existing sell position we have here, if you are taking advantage of that move, you want to be moving your stop loss to secure this current position. Personally, I have my stop loss moved to my entry point while I wait out to see how price action will be playing out. And if there are more opportunities, we definitely want to be adding more position to our existing trade. Now, from this current structure here, the only thing that will make me consider buying the XAUUSD is for price action to take out this trend line. So if price action at any point in time breaches this trend line, then at this point we want to start considering buying the XAUUSD. Now remember, you're not going to be getting too excited at that point, as we want to wait for further confirmations to happen. So once we witness the breakout of the trend line, we scale down into our lower time frame to look out for retest of structure, where continued buy pressure on our lower time frame will give us the privilege of joining a bullish move to the upside. Then we can now maximize the potential of that bullish move by having buy stop orders above the 1,958 and the key level at the 1,960. But I doubt if this is going to be happening today, as the momentum is looking very strong in the bearish side. So let's see how this plays out, but let's keep our minds open for the potentials of buyers to coming in at this point. So if you have any questions regarding what I just explained on the XAUUSD, feel free to let me know in the comment section. And you want to mark these levels out on your chart so that you can use it as a reference point to guide your trading activity for today. So I'll be taking the next 10 to 15 seconds to read through the chart and see if there are any questions, while I also give you the time to screenshot my screen if you want to, so that you can use it as a reference point to guide your trading activity for today. All right, so in the absence of no questions, I want to assume that we're on the same page here. So I will be moving on to the next instrument, which will be the last pair we are going to be taking for today, and that is the USDJPY. Now on the USDJPY, let's scale up into the 4 hours time frame, where we want to have an holistic perspective into what has really been going on in this market since the first day of the month of May. Now, looking at the structure closely, you will see from an holistic point of view that price action has been bullish. And to emphasize the bullish momentum here, I was able to connect a series of higher lows, which has given me a couple of trend lines to work with for this week. And this further emphasizes the strength of the buyers in this market. And you know how we use our trend lines here. As long as price action remains above the trend line, we have no other choice than to look out for more opportunities to buy the USDJPY. And not only if the breakdown of the trend line happens that we want to start considering selling, unless structure states otherwise. Now, zooming into what has been happening here in the last couple of weeks, I have a couple of levels that we are going to be using to guide our trading activity for today. Now, one of these levels is the 140.750 area. a level which has been a strong selling niche since the last trading week of last month, before we saw the final breakout of this level during the last week's trading session. We saw the breakout of this level here, and since then price action had continued to find higher highs. However, something interesting happened on the last trading day of last week, as we saw that as soon as price got to the 142.00 level, a very strong psychological level, considering the round figure of that price, we begin to see selling pressure resume around that area. Now, the question going into the new week here is that following this impulsive move that got us to this point, is the continued selling pressure around this area going to transition into a reversal pattern, probably in the form of a double top structure, to incite a retracement of this impulsive move, where depending on how price action reacts to either of these trend lines will determine if we are going to be joining a trend continuation to the upside, or a breakdown will incite a sell-off in this market. So these are the things we are going to be looking at today, but most importantly, we want to see how participants in this market will be reacting to that key level at the 142.00 level, as depending on what happens here will determine where price action is likely going to be going, at least for the first half of this week. So in order to have a better perspective into what is going on there, we want to scale down to a much more lower time frame, like the 1 hour time frame, where we begin to see things more clearly. Now, right on the 1 hour time frame, this was what I was able to spot here after trying to decipher how participants in the market are thinking. Now, the first thing you will notice on the 1 hour time frame is that the new week started on a bearish note. As you can see here, price action started at around the 142.00 level, our key level for this week, and we saw the bearish momentum pushing price into the 141.500. And as soon as price got here, we saw another wave of bullish momentum back into that resistance line to give us a flat channel to work with. And this also emphasized the level of indecision in this market too as well. And you know how we do it. Whenever we have this kind of simple setup, we want to wait patiently for structures to mature, where a breakdown of the support line will give us an opportunity to sell, and the breakout of the resistance line will give us an opportunity to buy. Now, I also want to let you know here that this whole structure we have here could turn out to be either a trend continuation pattern or a reversal pattern, which I said earlier could be a double top structure. As you can see, price is yet to comfortably break out of the previous high. So there is a likelihood that we could have a breakdown, retest of the 141.500, which could serve as the neckline of the double top structure to incite a bearish move. But in as much as we consider the fact that price action has been strongly bullish in the last couple of weeks, I had a buy stop order above the resistance line here at the 142.00 level to capture a trend continuation to the upside. Though my position is triggered right now, though I'm in loss right now, I'm in negative right now on this one, about minus 9 pips loss here, but I'm still hoping that price action will continue to the upside. But if you are not taking any position at this point, it is quite reasonable that you want to be having a buy stop order above the 142.00 level to capture this bullish move if it happens. Then you have your stop loss sitting somewhere close to the support line here, the 141.500, which will be dovetailing to between 35 to 40 pips stop loss. So I'm looking forward to a bullish momentum here. I hope that price will continue to the upside, and if it does, I want to be looking out for more opportunities to maximize the potential of that move. However, if price action drops and takes out the support line here at the 141.500, then at this point we could likely be seeing a reversal pattern to incite a retracement move. And remember, if the breakdown of the 141.500 happen, considering that this is a strong bullish momentum, we want to remain patient before joining any bearish move. So once the breakdown happens, you scale down to your lower time frame to look out for retest of structure signs that sellers are gradually gaining momentum, after which we want to be part of the bearish move. And then if price action continues to the downside to break down the 140.750 level, then definitely we want to be adding more position to our existing trade. So that is how we are going to be selling the USDJPY for today. Personally, I'm holding on to a bullish bias, but if price drops below the 141.500, we obviously want to be getting ready to be part of the bearish move. So that is my view here on the USDJPY. If you have any questions whatsoever regarding what I just explained, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to read through the chat and see if there are any questions before I round off and close for today. All right, so in the absence of no questions, I want to assume we're on the same page. So on this note, I want to call it a day here. It has been a wonderful moment, and we were able to take, how many pairs did we take today? We took the USOILSPOT, we took the USTech100, the GBPUSD, USDJPY, and of course the XAUUSD. So we have 5 interesting opportunities to maximize our potential to make profits this week on the Extreme Speed Live community. So let's be on standby to catch this opportunity, and I'm confident that we are capable of taking advantage of these opportunities as we were able to simulate all the potential and possible scenarios that could happen in the market today. So with that being said here, I wish you best of luck today. And for those who are joining us for the first time, I hope you are able to gain 1 or 2 things from what we discussed today. Don't worry. It will take some time for you to acclimatize with us. Just try as much as possible to stay tuned in. Continue to be part of the session on a daily basis. And with time, you get to understand how this works. And you will be able to independently use the information you have gathered here to make your own decision on your own account. So I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well the instrument we have been monitoring so far this week has been doing as we get ready for another New York session tomorrow. Do have a wonderful evening, everyone. Bye-bye.